Good afternoon, ladies and gentlemen. Today is Monday the 30th of January. We are glad to present our weekly analytical review for major Forex instruments. Last week, the EUR-USD pair was unsuccessfully trying to reach the level of 1.0825, which coincides with the Fibonacci retracement of 38.2%. The pair has the potential to decline, especially if it breaks down the level of 1.0660 and the middle line of the Bollinger Bands. In this case, the price would fall to the levels of 1.0500 and 1.0400. Otherwise, it can rise to the levels of 1.0825 and 1.0960. It should be noted that the movement of the pair this week can be significantly affected by the results of the US meeting. Under these circumstances, short positions can be opened below 1.0660 and or the middle line of the Bollinger Bands with the target of 1.0500. Above the level of 1.0770, long positions would become relevant with the targets at 1.0825 and 1.0960. Last week, the pound-dollar pair reached the level of 1.2630, which coincides with the Fibonacci retracement of 23.6%. Currently, the pair is trying to hit the middle line of the Bollinger Bands in the area of 1.2350. If the level of 1.2630 is broken out, the pair will probably continue to grow to the levels of 1.2760 and 1.2900. However, this scenario seems less likely because the stochastic reached the oversold zone and gave a sell signal. During the week, traders should pay attention to the meeting of the Bank of England and its decision on interest rates, but the main driver of the market movements will be the meeting of the US Federal Reserve. In this situation, short positions should be opened below 1.2500 with the target at 1.2350. Long positions should be placed above the level of 1.2630 with the target at 1.2760 and 1.2900. Last week, the dollar-yen pair rebounded from the level of 112.40 and is now being corrected to the middle line of the Bollinger Bands. If the price breaks out the middle line and consolidates above the level of 115.60, further growth would be possible to the levels of 117.50 and 118.50. If the price consolidates below the 114.40 level, it is likely to continue the fall down to the levels of 112.40 and 111. The growth scenario seems preferable since stochastic is directed upwards, while the MACD histogram is going to cross the zero line from below. In this situation, long positions can be opened above the level of 115.60 with the target at 117.50. In the case of a breakdown of the level of 114.40, short positions could be opened with the target at 112.40. The Australian dollar-US dollar was trading in the range of 0.7520 to 0.7610 last week. The key level for the bears seems to be 0.7520. If the key level is broken down, the price could go down to the cluster of Fibonacci corrections at 0.7440 area. If the price rebounds from the key level, it will probably return to the levels of 0.7610 and 0.7700. Technical indicators generally suggest a decline. The MACD histogram is decreasing in the positive zone, and stochastic is directed downwards. Under these circumstances, short positions look preferable. They can be opened below the level of 0.7520 with a target at 0.7440. If the pair rebounds from the level of 0.7520, long positions could be opened with the targets at 0.7610 and 0.7700. Quotes of gold fell last week to the middle line of Bollinger Bands. The market is in a state of equilibrium in anticipation of the Fed meeting results. In case of the breakout of the 1,194 level, the price growth could be continued to the levels of 1,211 and 1,225. Otherwise, the gold-dollar pair is likely to fall to the levels of 1,173 and 1,162. Technical indicators do not provide a specific signal. The MACD histogram is decreasing in the positive zone. Stochastic is approaching the oversold zone, indicating that prices may soon reverse. In this situation, long positions can be opened above the level of 1,194, with targets at 1,211 to 1,225. If the price rebounds from 1,194, short positions would become relevant, with the target at 1,173 and 1,162. That's all for today. Good luck with your trading.